What is happening, crypto fam? Get ready for a rapid-fire update because the digital asset space is moving at lightning speed, and you absolutely do not want to miss what's unfolding right now. We've got seismic shifts, critical levels being tested, and forward-thinking strategies emerging that could redefine the entire landscape. From preparing for future technological leaps to navigating current market turbulence and exploring ambitious long-term price potentials, this is your essential briefing. Stay locked in because we're diving deep into the stories that matter most, bringing you the insights you need to stay ahead of the curve. Let's get straight into it. First up, a critical look at securing our digital assets in an era of quantum computing advancement. Next, we're diving into the immediate price action as Bitcoin faces significant support level challenges, signaling a potential shift in market control. Then, we explore the ambitious projections for Bitcoin's future, examining the policy, institutional demand, and geopolitical factors that could drive its value to unprecedented heights. And finally, we'll analyze the current market rebalancing, pinpointing strategic entry points for key altcoins amidst Bitcoin's volatility. Don't go anywhere. Make sure to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Quantum leap in security, protecting Bitcoin in the post-quantum era. The digital asset landscape is constantly evolving, and with it, the very foundations of security are being re-examined. As the world edges closer to the advent of quantum computing, a technology with the potential to disrupt current cryptographic standards, the focus is shifting towards safeguarding digital assets like Bitcoin against future threats. This isn't a distant science fiction scenario. It's a present-day concern that requires proactive strategies, particularly for those managing significant holdings. The question on many minds is, how do we ensure Bitcoin custody remains secure when quantum computers could potentially break the encryption that currently protects it? The core of Bitcoin's security relies on public key cryptography, specifically the elliptic curve digital signature algorithm, ECDSA. This algorithm generates private keys that are mathematically linked to public keys, which in turn are used to create Bitcoin addresses. The security of this system hinges on the computational difficulty of deriving a private key from its corresponding public key, a task that is practically impossible for today's classical computers. However, quantum computers, with their ability to perform certain calculations exponentially faster than classical machines, pose a theoretical threat. Shor's algorithm, for instance, could potentially break ECDSA, allowing an attacker with a sufficiently powerful quantum computer to derive private keys from public keys and steal funds. This looming threat has spurred significant research and development into quantum-resistant cryptography, also known as post-quantum cryptography, PQC. The goal is to develop new cryptographic algorithms that are secure against both classical and quantum computers. Several promising approaches are being explored, including lattice-based cryptography, code-based cryptography, hash-based cryptography, and multivariate cryptography. Each of these has its own set of advantages and disadvantages in terms of security, performance, and key size. For Bitcoin custodians and users, the transition to quantum-resistant solutions will be a complex undertaking. It will likely involve upgrading wallet software, changing how private and public keys are generated and managed, and potentially even migrating assets to new, quantum-safe addresses. The challenge lies not only in developing robust PQC algorithms, but also in implementing them seamlessly into existing blockchain infrastructure without compromising the network's integrity or user experience. This process will require careful planning, extensive testing, and broad industry consensus to ensure a smooth and secure transition. The concept of sovereign strategies becomes paramount here, emphasizing self-custody and the adoption of security measures that individuals can control and verify, rather than relying solely on third-party solutions. The community is actively discussing various implementation strategies. Some propose a gradual migration, where new addresses are generated using PQC standards, while older addresses remain functional until they are no longer needed or until a full network upgrade is feasible. Others are exploring the possibility of one-time use public keys, where the public key is revealed only after a transaction is signed, mitigating the risk of it being exposed to a quantum computer. The development of hardware security modules, HSMs, that are quantum resistant is also a critical area of focus for institutional custodians. This proactive approach to quantum security is a testament to the foresight within the Bitcoin ecosystem. It highlights a commitment to long-term viability and security, ensuring that Bitcoin can withstand the technological advancements of the future. The journey to a post-quantum world for Bitcoin will be a marathon, not a sprint, requiring collaboration, innovation, and a steadfast dedication to maintaining the security and sovereignty that define Bitcoin. But what does this mean for the immediate market? Stay tuned as we break down the current price action and critical support levels Bitcoin is facing right now. Bitcoin's support breakdown bears tightened grip on the market. Bitcoin's price action has recently triggered alarm bells among traders and analysts as it decisively broke below a critical support level, signaling a potential deepening of bearish control in the cryptocurrency market. This development has raised concerns about further downside potential and the strength of the ongoing market trend. Understanding these technical breakdowns and the underlying on-chain data is crucial for navigating the current volatile environment. On 4-hour charts, Bitcoin's price has fallen below the significant $112,000 support level. This breach has confirmed a bear flag pattern, a bearish continuation signal that suggests the selling pressure is likely to persist. The pattern's validation indicates that the momentum is shifting in favor of sellers, potentially leading to a more substantial correction. Technical indicators further reinforce this bearish outlook. The Relative Strength Index, RSI, a momentum oscillator, remains below the midline, indicating that the market is leaning towards oversold conditions and that bears are in control of short-term price movements. Moreover, the $114,000 level has now become a critical resistance point. Failure to reclaim and hold this level could see Bitcoin experience a more significant pullback, with analysts eyeing a potential drop towards the $100,000 mark. On-chain data provides additional context to this bearish sentiment. Over the past 30 days, Bitcoin has experienced negative exchange net flow, meaning more Bitcoin has been withdrawn from exchanges than deposited. This trend is often interpreted as a sign that long-term holders, or hodlers, are accumulating or holding onto their assets rather than selling them. While this accumulation by experienced investors can be a bullish long-term signal, it doesn't negate the short-term bearish pressures evident in the price action. It suggests that while the conviction among long-term holders remains strong, short-term traders are dominating the selling activity, pushing prices down. Analysts have pointed out that Bitcoin has seen an 11% drawdown over the past 3 weeks after reaching an all-time high of $124,500 on August 14. Despite a notable long wick below $109,000 on one chart, indicating buying interest at lower levels, the price has struggled to convert this into sustained support. Experts like Rect Capital have highlighted that if $114,000 solidifies as resistance, it would likely prolong the current pullback phase, potentially extending the correction deeper into the market. The market's immediate future hinges on Bitcoin's ability to reclaim key levels, particularly the $114,000 resistance. Furthermore, liquidation data reveals significant clusters of buy orders situated below $104,000. This suggests that if the price does fall to these levels, there could be substantial buying pressure to absorb the selling. However, it also means that the price may need to reach these liquidity pools before finding a stable floor. A critical factor to watch is the weekly close. A weekly close below $110,000 could serve as a decisive bearish signal, potentially triggering a sharper decline and confirming a broader bearish shift that could target levels as low as $100,000 or even lower in the subsequent weeks. The current market environment demands caution. While on-chain accumulation by long-term holders offers some underlying strength, the immediate technical indicators and price action paint a picture of bearish momentum. Traders are closely watching the $114,000 resistance and the $104,000 support levels as key determinants of Bitcoin's short to medium-term trajectory. While the market navigates these immediate price pressures, some are looking much further ahead, projecting Bitcoin's potential to reach a staggering $1 million. What factors could drive such an ambitious target? Bitcoin's $1 million horizon: policy, institutions, and geopolitics as catalysts. While the cryptocurrency market is currently grappling with short-term price fluctuations and technical levels, a more ambitious long-term vision for Bitcoin's value is gaining traction. Projections of Bitcoin reaching the $1 million mark are no longer confined to the fringes of the crypto community. They are increasingly being discussed in the context of significant macroeconomic shifts, evolving regulatory landscapes, and burgeoning institutional adoption. This optimistic outlook is underpinned by a confluence of factors, including strategic government policies, the growing demand from major financial institutions, and Bitcoin's potential role in geopolitical leverage. The path to $1 million for Bitcoin is not solely dependent on market cycles or technological adoption. It is intricately linked to policy decisions and the broader integration of digital assets into the global financial system. Governments worldwide are increasingly recognizing the implications of digital currencies, and proactive policy frameworks can significantly influence Bitcoin's trajectory. For instance, countries that embrace Bitcoin, perhaps by adopting it as legal tender or establishing clear regulatory guidelines that favor its use and development, could see increased inflows and innovation. Conversely, restrictive policies in major economies could stifle growth. Therefore, the development of sound, forward-thinking regulations is paramount for fostering an environment where Bitcoin can achieve its full potential. Institutional demand is another critical pillar supporting the $1 million thesis. As more traditional financial players, such as hedge funds, asset managers, and even publicly traded companies, allocate capital to Bitcoin, its legitimacy as an asset class grows. The introduction of Bitcoin-backed exchange-traded funds, ETFs, in various jurisdictions has been a significant step, providing easier access for institutional investors and validating Bitcoin as a serious investment vehicle. This influx of institutional capital not only drives up demand, but also contributes to price stability and market maturity. As more institutions enter the space, they often bring with them sophisticated risk management strategies and a long-term investment horizon, which can help mitigate the extreme volatility often associated with cryptocurrencies. Beyond policy and institutional adoption, geopolitical factors are also beginning to play a role in Bitcoin's narrative. In an increasingly uncertain global landscape, Bitcoin is seen by some as a potential hedge against traditional financial system instability, inflation, or geopolitical conflicts. Its decentralized nature and borderless transferability make it an attractive option for individuals and entities seeking to preserve wealth or conduct transactions outside the control of any single government or financial institution. Some analysts suggest that as geopolitical tensions rise, the demand for a censorship-resistant and globally accessible store of value like Bitcoin could increase, further driving its price upwards. Furthermore, the diminishing supply of Bitcoin, coupled with its increasing adoption as both a store of value and a medium of exchange, creates a powerful demand-supply dynamic. As more Bitcoin is locked away in long-term holdings or used in applications that reduce circulating supply, the scarcity factor becomes more pronounced. This inherent scarcity, combined with growing adoption driven by policy, institutional interest, and geopolitical considerations, forms the basis for the ambitious $1 million price target. It represents a scenario where Bitcoin matures into a globally recognized and utilized asset, akin to digital gold, but with the added utility of a decentralized network. The convergence of these elements, supportive policies, robust institutional demand, and its utility in a complex geopolitical environment, paints a compelling picture for Bitcoin's long-term future. While challenges remain, the potential for these forces to drive Bitcoin towards unprecedented valuation levels is a narrative that continues to captivate the market. With such ambitious long-term projections, it's also important to understand the current market dynamics. How are altcoins faring amidst Bitcoin's volatility, and what are the strategic entry points now? Altcoin resilience amidst Bitcoin's volatility, spotting strategic entry points. In the dynamic world of cryptocurrency, Bitcoin's price action often dictates the broader market sentiment, but the resilience and potential of altcoins remain a key focus for many investors. As Bitcoin navigates critical support levels and potential bearish trends, the crypto market is simultaneously undergoing a rebalancing phase. This period presents unique opportunities to identify strategic entry points for various altcoins, particularly those showing strength or offering innovative utility, even as Bitcoin experiences volatility. The current market scenario, characterized by Bitcoin's struggle to maintain key price levels, creates a complex environment for altcoins. While a Bitcoin downturn can often drag the entire market down, it can also lead to periods where certain altcoins decouple, exhibiting independent strength or offering uncorrelated returns. This is often the result of specific project developments, network upgrades, or increased adoption within their niche ecosystems. For traders and investors, the challenge lies in discerning which altcoins are genuinely resilient and which are merely experiencing temporary relief rallies before succumbing to broader market pressure. Identifying these opportunities requires a deep dive into fundamental analysis, technical indicators, and an understanding of the specific use cases and technological advancements of each altcoin. Key altcoins such as CRO, Chronos, OKB, OKX token, and Pi network are frequently discussed in the context of strategic entry points. CRO, the native token of the Chronos blockchain, has seen a surge in interest due to its role in the growing decentralized finance, DeFi, and Web3 gaming ecosystems. Its utility within the Crypto.com platform and its potential to attract developers and users to its blockchain make it a candidate for strategic accumulation during market dips. Investors often look for periods of consolidation or minor pullbacks in CRO's price, especially when its underlying network activity or adoption metrics show positive trends, as potential buying opportunities. Similarly, OKB, the utility token of the OKX cryptocurrency exchange, benefits from the exchange's global reach and expanding service offerings. As OKX continues to innovate and grow its user base, OKB's utility for trading fee discounts, participation in token sales, and access to exclusive features can drive demand. Strategic entry points for OKB might arise during periods of broader market correction, where its price may be temporarily suppressed, offering a chance to acquire the token at a discount relative to its perceived long-term value, especially if the exchange itself continues to gain market share. Pi Network's Pi token represents a different kind of opportunity, focusing on mobile-based cryptocurrency mining and accessibility. While still in development and not yet listed on major exchanges, the anticipation surrounding its mainnet launch and the growth of its user community make it a unique case. For those interested in Pi, strategic entry might involve actively participating in the network's development and growth phases, understanding that its value proposition is tied to its future utility and adoption rather than current market trading. Early engagement and adherence to the project's roadmap are key. Identifying these strategic entry points involves several considerations. Firstly, investors should monitor Bitcoin's price action closely. Significant support level breaches in Bitcoin might precede broader market downturns, creating wider opportunities across the altcoin market. However, it's crucial to differentiate between market-wide sell-offs and specific altcoin underperformance. Secondly, fundamental analysis is key. Projects with strong development teams, clear roadmaps, active communities, and real-world use cases are more likely to show resilience and offer long-term value. Finally, technical analysis can help pinpoint optimal entry levels, looking for oversold indicators, consolidation patterns, or bounces off key support levels within individual altcoin charts. In a rebalancing crypto market, the ability to identify and capitalize on these strategic entry points for promising altcoins amidst Bitcoin's volatility is a hallmark of successful investing. It requires patience, research, and a clear understanding of both macro market trends and micro project fundamentals. That wraps up our deep dives for today. let's quickly recap the biggest stories that moved the market. And that's a wrap on today's essential crypto updates. We covered the crucial steps for quantum-resistant Bitcoin custody, the latest on Bitcoin breaking support levels and the bearish signals, the ambitious $1 million price target fueled by policy and institutions, and strategic altcoin entries in a rebalancing market. Don't miss out on any future updates. Hit that like button, subscribe to Bitcoin Bulletin, and ring the notification bell. Follow us on all social platforms for more insights, and let us know your thoughts in the comments below. We'll see you in the next one.